Welcome back to the show. Well, prepaid cards and financial tracking, that's a service offered by eMerchant or EML. The company says there's huge potential in this market, with charities, government and business all looking for ways to control costs. But is this a business with an expiry date if the big banks get in on the action? Let's put that question now to the CEO, Tom Cregan. He's with us in the Sky News Business Centre. Tom, thanks for making time for us today. Firstly, just explain, because I did very briefly there, what eMerchant actually does.
So we're a prepaid card issuer that enables customers to load money onto a platform that will then be used through the purchasing cards. And they can restrict how and when and on what the cards can be used for. So they can control the time it can be used, the goods and services it can be used, the amount of the transaction. So we call it empowering your money. We say that as opposed to a corporate credit card, the organisations are loading money and then they're actually deciding the rules as to how the money is spent.
Right, so the kind of businesses or organisations that would be interested in this would be a charity, for example.
So charities tend to use it more, so Salvation Army is one of our clients, so they'll use it internally or on their corporate side as a corporate expense card that has a range of restrictions, poker machine venues, hotels, etc., that aren't in keeping with their values, so they don't want the card used there. And then for various welfare distribution programs, whether it's homeless youth or there's 24 of these programs that we're in the process of launching. The same technology, but just different restrictions on when and how and what it can be used for.
Now, this screams to me the banks. The banks are all about credit cards or even credit card companies. Why aren't they offering a similar service?
They do offer some similar products. So if you want what we would call just a petty cash card, so a card that can have funds loaded and used, then they offer some of those services. It really comes down to the fact that the banks, and having worked in banks and having seen this in the US, banks make money selling homogenous product that they can make at the lowest possible cost and sell to the biggest audience. With the Salvation Army, for example, that program we announced it a year ago. It's taken a year of development and it launches now. And it's highly customised. So they're not typically the kind of programs that the banks are hunting.
Now let's bring up a chart now to see what's happened to your share price, and that looks pretty good from Q1 this year, down below 20 cents to now. I think it's 59.5 trading today. So this is a pretty big market in the US, about 460 billion. It looks like our market here is starting to wake up to the potential. How big do you see this getting here for you, Tom?
I mean, we had some research done a few years ago that looked at different segments. So they looked at potential use, for example, within government. That was a several $billion segment. Charities were about a $4.5 billion segment. The commercial market was also estimated at roughly $7 billion. Salary packaging, our cards are also used or can be used for fuel cards and so forth. We have more and more applications coming, so I think the Australian market will end up being, in the $15 to $20 billion range that I can see today, which is a fraction of the US, but getting in the same direction.
Now you've had your AGM today, and I read a bit of a statement that your chairman put out, and he talked about this contract with the Queensland government, and I think you've previously said that will underpin the growth of the company. You're in the final stages, apparently, of executing that. Can you give us an update as to where it is and how optimistic you are of sealing that deal?
We announced it because we were very comfortable it was going to happen. It's probably a few weeks away, and it's literally just administrative delays that are holding that up. It's the right approach. The government have said they're looking for cost savings across the board, so they're approving a preferred supplier. And our role will then be to go to agency, whether it be health or trustees or whoever it might be, and look for opportunities where our cards can either reduce cost, so that's either through efficiency gains or reduce fraud and abuse if that's in the area of welfare spend.
Is this a business with an expiry date, in the sense that in the longer term we're moving towards payments off mobile phones? That's where it's going to go. People will have smartphones. We're not going to be using cards or credit cards. What does that mean for email? Is your solution port to a digital payments environment?
Yeah, I mean, it does, and we view that really we're not really a cards company. It's to me the value proposition is the managing of the account itself and the underlying account, and the crediting and debiting of funds off that account. So Visa and MasterCard and the domestic EFTPOS schemes will end up building their own mobile portals or mobile apps that we will hook into. So whether a customer goes to Woolworths and uses our card or they swipe a phone, it won't make any difference.
Okay.
You know.
And can I get one sentence from you? What do you think your biggest risk is from here on to achieve the kind of growth, or that will stop you achieving the kind of growth you want?
It's a lot of it's just an awareness of the business, because it's a growth, it's a new business, and then inertia, because once you've identified the opportunity, it's getting the organisations to be open to a fresh approach.
Okay, Tom, thanks for your time today.
Thanks,
we'll keep our eyes on that Queensland contract a few weeks away. So watch, email and